why are gold and silver losing value when inflation is out of control? So I wanted to bring, we've talked about this before, but this is a big question I think people are asking right now. They really want to know why is this happening? Why is gold going down, right?
Right.
So I wanted to bring up, I got a chart. Edgar, can you put up the chart from 2008 that I gave you? So this is the spot price of gold, right? This is the
Remember, it's a contract.
Right.
Gold.
This is the underlying value of gold, so the spot market. So you can see that in March of 2008, and March of 2008 was actually, we had reached a high. It was $1,032 an ounce, and that was the highest gold had ever reached at that point. And then
nominally.
Right. And then continued to fall from there till about November, almost November of 2008, when it got down to $692, and that was like an intraday.
Now, before you go on, let's see, when did Lehman implode? September.
Right.
Okay, so I just wanted to
Right,
keep that
and you can
perspective
see though,
in there.
and you can even see that gold during that Lehman period even bounced up, right? It went from about 750, 725, bounced all the way up to about 900 before it came back down. Now there was a big sell-off there because people needed, corporations, banks, they had margin calls. They needed to get rid of some of their other assets that were performing well in order to make
Pay
up for
off
the
those
losses in other assets.
Right.
Right. But I wanted to point out, you know, we had gold go, what is that, almost a 30% drop. Now, I'm not saying anything's going to be exactly the same as it was, right? But 30% drop in the value during that period of time before exploding to the upside.
Edgar, do you have that other graph that shows spot, right, from 2000 to today, right?
Yep.
To present. And so you can see that little drop there before.
In 2008.
Correct, in
Yep.
2008, before it then went up to make even newer highs, like about 1900. But we've broken out. You can see that cup formation. You can see how it broke out. And there's like a little mini cup at the end because a rising gold price is an indication of a failing currency. And once you really do get that this currency is going away, you think about it much differently. So they have to suppress it. Spot market is an easy and cheap and very visible way. Can I ask you, because you, of course, work with the wholesalers all the time, are we seeing premiums? What are we seeing happening with premiums right now?
Well, so premiums have been kind of holding, but let's get a look really quick at, like, for example.
Because that's the other thing that you have to keep in mind when you're looking at the spot market is that that's a contract price. What's happening in the physical world is really a lot more important because that is a true
Supply and demand.
Exactly. The spot's not. I mean, it's $150 and you control 500 ounces of gold. It's pretty ridiculous.
So my while I'm looking this up, my point is, you know, during a period where a lot of asset prices are falling, you're gonna see gold. You know, it's been holding pretty firm.
Sure, it
while
has.
everything else has been falling, but it broke down a little bit today. I think we're down like $30 or $40 this morning. But
look at what the stock market is doing. They're getting margin calls.
Right. So people are having to sell off, right?
What the market is willing to buy.
So premiums are still very high. Okay. Well, I'm just looking at Silver Eagles as one example. So spot price is like right around 20, and Silver Eagles are selling for about $33. So that tells you that the premiums are still pretty darn high on the physical.
Because of demand.
Especially on silver. Not as much on gold, but definitely on silver. Because the demand for silver is really high, especially
and supply
with prices.
Is not.
Prices coming down, people are buying it. So, but the main thing I wanted to get across with that 2008 chart was, look, we can have a falling price, and still while things are, you know, not that great. I think when did we go into that recession? It was 2007. I think is when they declared that there was a recession. So it was going down during that period of time and then skyrocketed up from there. So It's not buy gold as an insurance policy.
It is
right?
buy gold
And then
as an insurance policy.
don't look at it every day and
Right,
think, oh my
'cause it
gosh,
doesn't
what's my
matter.
gold and silver doing?
Right. I just keep accumulating, right? I don't really care what happens in the spot market because I know the true value of an ounce of gold because it has the broadest base of demand. And when you're going into a crisis, what do you want? You want something that has a minimal level of demand, one buyer, or you want 1 million buyers? Give me 1 million buyers because that really will make a market. So, and we have to...
And trying to time the market, right? Like if you would have bought any time during the 2008 period, even while it was coming down, it went up to $1,900 an ounce in 2012, right after that period. So, not that I'm saying buy it as a trade, but I'm just illustrating like it's still it was still a bargain even while it was falling.
It was, and let me tell you also, because we didn't show it on this, but at that same time where you saw the spot market falling, by December 2008, that's when the collectible gold coins made their current trend high.
Yeah, December of 09 was their current
Of
trend
09.
high. Yeah, because people started buying in
Thank
right
you.
around December of 08 and then pushed
Pushed
it for a whole year. They kept pushing it up.
Exactly. So, the physical market where it really is a supply and demand market versus a paper market where they can just create as much supply as they want. And manipulate it. Just don't be fooled. If you like this clip and you want to watch the full video, just click right here. And to subscribe, click right here.